After the recent interest rate hikes by the Fed, the markets have been getting crushed. And as Cathie Wood invests in the smaller cap innovation sector, then it's no secret that her funds have been taking some of the biggest beatings. The flagship fund is now down 53%, Ark Fintech Innovation down 52%, and genomics down 48%. And then add to the fact that the US economy will probably be going into recession, the question is then, is now the time to be selling stocks and crypto? Well, in this video, we'll find out the latest from Cathie Wood and Ark Invest and what they think is the biggest problem and opportunity in the market right now. So we'll be looking at what is going on, the markets are crashing, and is this the start of something bigger to come? Then Cathie Wood and Elon Musk were on Twitter this week discussing passive investing versus active investing, and we'll cover what was said. And then we'll finish up with what Cathie Wood believes is the biggest opportunity right now, which is being completely missed by the market. As always, if you do enjoy anything in the video, then drop a like, always appreciated. Okay, first up, the markets this week have been in a tumble. So, what is the latest from Ark Invest? Are they concerned? Let's find out.
The Fed raised interest rates 50 basis points this week. And I had been saying that I thought that would be a mistake. The markets are corroborating that it seems that the Fed is making a mistake. So we've seen the stock market go through a spasm. The S&P now from its peak is down 15%. The NASDAQ from its peak is down 25%. Pure play innovation strategies like ours are down 60 to 75%. So that's not just a spasm, that's a convulsion. And you'd think that innovation companies that are not in benchmarks are witnessing the end of their world. It couldn't be further from the truth. This is a huge inefficiency in the market, this tendency to move towards benchmarks in risk-off environments. It's ridiculous that the genomic revolution and blockchain technology and crypto assets are all behaving exactly alike. In fact, crypto assets began to correlate highly with the NASDAQ. Starting at the beginning of COVID. Before that, there was no correlation at all. And so we think this is an anomaly, a massive anomaly, and that with time it will correct and the efficiencies will be introduced back into the market.
So she points out the fact that everything is now starting to move and correlate together, whether it's the NASDAQ, whether it's crypto, genomics. She says it's a massive anomaly and it's only a matter of time until things correct. And the other main point she brings up is the big debate between passive investing and active investing, saying that passive has got completely out of hand, and she made a good point about Tesla on Twitter this week, saying passive funds prevented many investors from enjoying a 400-fold appreciation in Tesla, going from a 1.6 billion market cap to 650 billion when it entered the S&P. And something that if you just invest in index funds, then you would have missed it. But then interestingly, Elon Musk jumped onto the thread to add, exactly right before he died, Jack Bogle of Vanguard said that index funds were too great a percentage of the market. And he really knew what he was talking about. And he continued saying, there should be a shift back towards active investment. Passive has gone too far. Now, it's an interesting debate, but index funds have really helped the smaller investor not just make excellent gains and beat most professionals, but also save a ton of money on fees. So, okay, to finish up, Cathie reiterates the big opportunity right now and why it's being missed by the vast majority of people.
So given the dreariness in the equity markets and the bond markets today, and now increasingly the commodities markets and crypto, take a look at our research. Read our Twitter profiles for some hope and optimism, because I can't tell you how excited and confident we are that our platforms are going to transform the world and are entering exponential growth trajectories now. This is not about 5 years from now. We are now living the reality that was only a dream in the tech and telecom bubble. That was a dream, and you had investors piling into the dream. Today is the reality, and they're running away from it. They're running for the hills, running for their benchmarks. The decisions in the tech and telecom bubble ended badly. The decisions, those running away from innovation right now, we believe those decisions will end badly as well. So again, read our research for hope, optimism, and really a thrilling look at what the future is going to hold.
So she says that the dream was back in the year 2000 when everyone piled into tech stocks. However, it was too soon and tech went on to get crushed. And she says right now the tech is ready. However, everyone now is running for the hills. Now, I personally think over the next 6 months, while the prices may be getting crushed and the maximum fear, uncertainty and doubt begins to flood into the market, one of the best things we can do is to simply dollar cost average in. Historically, by just dollar cost averaging as the market goes down, it's been an excellent strategy for the patient investor. So there you are, guys. Hope you enjoyed. Let me know how you will be investing over the next 6 months. What's your personal strategy? And for now, just to say, if you did enjoy anything in the video, then drop a like. Always appreciated. If you haven't yet subscribed, click below and join us. Got some great videos coming up that you don't want to miss. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.